Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Today is a little bit of a twist because we're going to talk about Trump accounts for kids. And you may wonder, what in the world does that have to do with retiring with peace? Well, we get a lot of questions and requests for information on how can we help our family. A lot of times clients have gotten to a point where they're set, everything's good for them, and they start to think about, passing money along. How do we benefit grandchildren, especially? And so this is just one way to do that. I'm not saying that everybody should go run out and open up Trump accounts for grandkids, because there's good and bad. I shouldn't say bad. There are different counts available for children, and they each have their own separate advantages. Let's put it that way. For Trump accounts specifically, they're going to need to be opened and controlled by a parent or legal guardian. So if this is for your grandchildren, you're not really in control of it. There's nothing necessarily that you need to do right away. Therefore, the information that we talk about here is probably something you're going to need to share with your children if they're going to open accounts for your grandchildren. But again, we get a lot of people who are retired, they're looking to help families, and this is one option to do so. And the reason we bring it up now is because you can get these set up by filing a Form 4547 on this year's tax return. So if you have adult children and you're looking at this as an option, your adult children can file Form 4547 as part of their tax return to get this process kicked off. This isn't going to launch until July 5th of 2026, and we are in February at this time. So there's not going to be a whole lot of activity between now and then other than filing this tax form to get things rolling, and then the government will provide more information once there is a custodian and the accounts open and things start to happen as we get into July. But for now, we can understand what these are and file a simple form with our tax return to get that ball rolling. So again, this is for kids under age 18, one account per child controlled by a parent or legal guardian. What will happen if the child was born between January 1st of 2025 through December 31st of 2028 is the government will seed $1,000 into that account. So if you have a grandchild or child born during that couple year period, 2025, 26, 27, 28, those 4 years, if they're born in there, the government is providing $1,000 into that account. A couple important thoughts on the contributions. They are limited to $5,000 per year. The contributions are not deductible. And when the money comes out, the amount contributed is not taxable, but any earnings are taxable, which you just have to be mindful of how this is going to be used and taxed. This is not necessarily a bad thing, but again, there are other options that will have different uses, and we'll go into all those, because for a child, you could have just a regular investment account that's a custodial account where the child's under a certain age, depends on the state, but generally between 18 and 21, the child has their account, but there is a custodian, generally the parent, who is in control of that account. That has a lot of flexibility. There's no real great tax advantage in there, but you can just open up a regular investment account with parental control and have the money invested, and you can use it for whatever, whenever. There's not really a restriction on that as long as the money is for the benefit of the child. So that's one option. You can have a Trump account, which is uh, less flexible, but it has the tax advantage of being able to defer the taxes on the earnings until the money's taken out. And also, there's no tax on the money that has gone in. So there's a little extra tax advantage, but you can't just use it for whatever. You could use it for education expenses, first time home purchases, starting a small business, and retirement rollover. Those are the four primary uses that you are allowed to have and thereby defer the taxes. So you can have a regular investment account that can be used for anything. Trump account is focused on those items: education expenses, first time home, starting small business, retirement rollover once they get to a certain age. You could also use, if they're old enough and working, I shouldn't really say old enough because technically you could be a 6-month-old model and be making money and this will still work. But you can use a Roth IRA if they have earned income and contribute money to that instead. Now, that money can't really be touched until retirement with a few exceptions. But the benefit there is that once the money gets in, it's in a Roth and it's completely tax free forever. Again, but it's restricted to retirement with a few exceptions. So it's understanding what those options are: the regular investment account, Trump account, Roth IRA. And we didn't even mention 529, for example, that's specific to education. So there's lots of different options for kids. It's important to understand what are you trying to accomplish with those different options. But if you decide that the Trump account is the way that you want to go, and especially if you have a child born in 25, 26, 27, or 28, in those 4 years, the government's putting $1,000 in there anyway, so you might as well open the account. If you want to get that set up now or as you're filing your tax return, again, it's Form 4547 to do that. And that's my main reason for bringing this up, is that it's timely. It's going to go along with the tax return. This is one of several options to help a grandchild if you are in retirement and you're feeling like your retirement is set and you want to help family. This is one option. You could also use 529, Roth IRA, a general custodian account. They're called, generally in most states, they're called UTMA accounts that are controlled by a parent. Lots of different options. But if you're going the Trump account route, especially if it's a newborn that was born in 2025 or early here in 2026, you can identify that. Start by getting the account open. The government puts in $1,000. It's an option. They're not necessarily good or bad. They all have their different advantages. So just decide what it is that you want to do for your grandchild, or in some cases, if you're younger and listening to this, for your child, to understand where you want to help them. But if you're looking at the Trump account, again, it's Form 4547 on this upcoming tax return. That'll help get the ball rolling, and you'll be ready to go when they turn that on in July.